Hi all, welcome back. So today is 2nd November 2022, and in this video I will try to explain you about a lock-in period of the stocks and what exactly uh, this period is and how it impacts the stock price. So let us try to discuss these points in this video so that it will be very much helpful for you, because in this November month we have around 11 stocks where their lock-in period is going to expire. So that expiry will have some impact on the stock price. So let us try to see what is this lock-in period actually and how it impacts the stock price. Okay, so at higher level, lock-in period is something in this way. So for every company, okay, for every company there will be it will have two phases. First phase is when it is trading in the private company mode, and the other one is when it comes to the public sector. So these are the two phases that every company will have it in their business process. So initially what happens, any company when they started their business, they will have their investments from the founders of the company or few of the higher officials in the company, or some from promoters, or some from banks, or any other investors who are interested. They would have been invested in the company, and after getting investments, they would have started their business. And after running for some time, they will come to the public sector to raise the funds for their expansion of the business or for any of the business plans going, I mean, further plans in the growth. So these two are the main phases for each company. So first phase will be the private phase, and second phase will be the public phase. So here, when it is trading in the private phase, the shareholders would be very few, like founders of the company or few promoters who will be investing in the company. But when it comes to the public sector, it has a large set of public investors also, but the shareholding percentage will be very much less compared to these promoters or the founders of the company. So these people will be having large portion of the shares compared to the new public investors, because when they come to IPO or when they come to public while raising the shares, so they will be releasing few shares only, not all. So around 60 to 70% of the shares will be with these initial investors, and remaining 40% or 50% will be with the public investors after coming to the public. So out of this public, there will be huge set of people here, like even retail investors also will be involved in the public shareholding pattern. So now here lock-in period is something I mean, it is something a duration. Okay, it is a duration actually where the investors who are there before the IPO process should not sell their shares during this lock-in period. Okay, I will explain you again. So assume that this company, ABC company, has three investors, each having 1 lakh shares with them. Okay, let's take an example like this. So ABC company, it is trading in a private sector now, and it has three investors, and each investor has 3 lakh shares. And now it came to public sector, and it has released 50,000 shares. Assume. So 50,000 shares to a new public investors, and 3 lakh shares are with the shareholders who are already bought before pre IPO process. So that means at this point of time, it will be having 3.5 lakh shares, 50,000 shares for the public, and 3 lakh shares for the shareholders who are already invested before the IPO process. So these investors who have already invested before IPO process should not sell their shares immediately after coming to the public sector. So that means once company comes, assume today is 2nd November. Okay. So assume today, 2nd November, the ABC company came to public sector. And immediately on 3rd November, these people should not sell their shares. They should have they should wait until this lock-in period completes. The SEBI or stock exchange board has kept this rule saying that these investors, early investors, should not sell their shares immediately once company coming to the public sector to avoid the volatility. Okay. So just I have given you example, right? 3 lakh shares are with them and 50,000 shares they released to public. And if in case 2nd November they came to public sector and 3rd November, if any of these people were already invested in the initial stage, if they want to sell 50,000 shares or 20,000 shares, it will be impacting or it will be giving a heavy supply of shares to the stock market, right? It will be giving heavy supply of shares because these people having large portion of shares with them. And even 1-2% if they sell, or 1 or 2% out of their share portion, it will be giving a heavy supply to the market, which eventually makes the stock price to go down. And it will also give the volatile movement also. So to avoid that kind of volatile movement and heavy selling pressure on the stock prices, the stock SEBI or the stock exchange board has uh, given this lock-in period. So this lock-in period is only applicable for the pre-IPO shareholders. Okay, so those who have already invested before the IPO process, for those for them only, this lock-in period will be applied, and they have to wait until that period. And generally, this lock-in period will be around 6 months to 1 year duration. Okay, so these early investors should have to wait if they want to sell their shares in the open market. They have to wait until this lock-in period completes, and then only immediately they can once that lock-in period completes and the next immediate trading session they can sell their shares if they want to take some profits out of it. So that means these people who are invested in the early stages of the business process, they cannot sell it. I mean, it's not easy for them to sell in this private phase. So they can easily sell to the public once the company is trading in the stock market, where they can find large number of buyers in the market in a daily basis. So this is a place where these investors can easily sell their stocks. So that's the reason these people will be very much eager to get this lock-in period to complete, because once if this lock-in period is completed, they can sell their shares at any point of time based upon their own interest. So this lock-in period is very much important, and they will be eagerly waiting to complete to get this period to complete. And generally, this period will be around 6 months to 1 year. It may be varying for company to company based upon their earlier agreement. Okay, so as I mentioned, what is this lock-in period means? This period is the length of time that insiders like directors, senior officials, entity or individuals that owns more than 10% of publicity. That means if you see here in this example, in this statement, public, once it comes to public, there will be two types of investors. One is new public investors and already who are already the shareholders before IPO process. So these people will be having more than 10%, definitely. So more than 10% of publicly traded companies voting shares are forbidden from selling their shares. And this period for an IPO typically lasts for 6 months, but can be extended up to a year. And the reason behind this period is that it will give the company, I mean, once after coming to the public sector, the company should get some time to settle down and to utilize the funds that have they are raised in the IPO process. So they have to settle down everything, and they have to make the investment complete, I mean, in a proper way, and to get the business continuing in their expected plans. So to make the company to settle down after going to the public and avoid any mass sell-offs that could drive down the share price. Okay, so because if you go back here, these people, early investors, are will be the major shareholders, and if they want to sell it, it will be giving a huge pressure on the stock price. That's the reason to stop them on from selling their stocks immediately while coming to the public sector. So this exchange, SEBI has kept this rule for them only. Okay. So now, as I mentioned, the purpose of lock-in period is, as I said, to make this company to settle down. And here, during this lock-in period also, if company wants to raise their capital, they can raise it by releasing few more additional shares to public. Because uh, initial, I mean, once after coming to IPO, the if you assume that 6 months is the lock-in period for them, so that means during 6 months they can again, between the duration, 6 months duration, they can release few more shares if they want to still if they want to raise few more funds from the public. So that means until that 6 months duration, uh, it will give benefit. Mean it will be helpful for the company. They can assess it and they can plan it if they need more funds or not. And before completing the lock-in period, they can raise it if they want it by selling few more shares. And once the period expires, the lock-in period expires, investors are free to sell their shares on the open market. Okay, so now after explaining this, in simple, what we are seeing that lock-in period is only applicable for the investors, early investors who have invested in the business when it is in a private sector. So once after coming to the public sector, those early investors are not allowed to sell their stocks immediately after coming to the open market. So they have to wait for the lock-in period duration to complete. And this lock-in period duration is around from 6 months to 1 year, right? And now in this month, in the November month, we have around 11 stocks where they have recently came to public sector. And these 11 stocks are completing their lock-in period in this month. Like first company is Campus Activewear, where it has a lock-in period ending on November 3rd. And next one is Rainbow Children's Medicare. It is expiring, I mean, lock-in is expiring on November 5. And Nike on November 9. Fino Payments Bank on November 10. So like this, in this complete month, we have this many companies have expiring their lock-in duration. Okay, so if you see here, one point that I want to highlight in this data, if you observe this issue price is the price where uh, company sets when they're coming to IPO. Okay, so when they're coming in the IPO, they will uh, set the price for each share. Like each share price would be 292 or 542. This price will be defined by the company. And now the current market price as on 31st October 2022. Okay, as on 31st October 2020, today is 2nd November 2022. And these are the prices now. Current market price is this one. So if you compare the issue price, mean the price when they are coming to public and the current market price here, almost 292 579, it is almost around roughly 70 to 80% of growth we are seeing in the price. Like if you round figure it to 300 and it is round figure it to 600, so 80%, more than 80% roughly, 80% of increase in the price. So like that, 1 2 3 4. Okay, so so Campus Activewear has given the growth of 80% here, whereas Rainbow Children's Medicare Care has given around 20% or 25% here. Whereas Nika, it is a very marginal improvement here, from 1125 to 1180. So not a major improvement in the price. So this means what we can tell from this data is this Campus Activewear is given 80% of growth in the stock price here. And tomorrow, November 3rd, and lock-in period is expiring for this company. And the shareholders percentage, like 63% of the shares are released tomorrow. Means these 63% of the shares are from the investors who have already invested before IPO, right? So now tomorrow, these 63% of the shares, they can sell it. So they may not sell it everything, but even if they want to sell it 1 or 2% also, it will be having a heavy impact on the uh, stock price, because there will be heavy supply of the shares. And because we are seeing 80% of the growth, 80% of the appreciation in the stock price here. So this particular campus activewear, we have to be very cautious tomorrow, November 3rd, because their expiry, lock-in expiry, is happening tomorrow. And it's a percentage of shares is also very huge, 63.8 percentage, right? So that means this particular company, we have to very much observe it closely tomorrow. And we have to see how it is behaving in the intraday price action, because we have to see how volatile. And we, we, have, we have to see whether the investors are willing to sell their shares and book this profit or not. Like that, we have these remaining companies also. But as comparing to Aptus, comparing to Campus Activewear, other stocks are not very much impressive. Here also, you can say Go Fashion has given a good return here, from 690 to 14, double, more than 100% of uh, appreciation is there in the stock price. So this is also very much attractive now. So immediately on 25th November, it is expiring. So, and the share percentage which they can sell on the expiry is 46 percentage. So it is also very huge percentage compared to the whole shareholding worth. So that means Go Fashion is very much we should have very much focus on this Go Fashion and Campus Activewear, because they have huge improvement in the stock price compared to other. And if you see the Paytm also, Paytm, when they are coming to the IPO, they issued with the 2,150 rupee per share, but now it is trading around 637 rupees. So it has there is a loss here, and it is more than 50% downfall in the stock price. So these people, 85% of the investors who have already invested in the IPATM before IPO, they cannot, they don't want to sell it, right? Because they have invested they might have invested with some amount which is lesser than 2,150, but the market price is very much less compared to the IPO price. So we have to see how this Paytm is getting impacted on November 14th, lock-in period expiry. Because though there is 40 to 50 or more than 50 to 60% of decrease in the stock price, we have to wait and see how the promoters or the early investors are reacting for this lock-in expiry. Okay, so how important the lock-in period is expiry is, because as I mentioned just few minutes back, that this lock-in period will give the relief to the early investors. So they will be waiting for this expiry to complete, and once it is complete, they are free to sell their stocks at any point of time, right? So that's the reason. So if, as we are seeing, that if these people, the investors who are there here in the Campus Activewear, since there is a more than 80% of the growth in the stock price, they may want to sell it on the first day itself to book some profit, right? So that will be giving a heavy supply in the market, and that may also give the heavy volatile movement in the stock price also. So uh, generally what happens here is, when lock-in period expires, generally stock prices will come down because of this kind of profit bookings from the early investors. So that is the reason these stocks, some of these stocks are already started going down because of this lock-in period is expiry is coming closer, because they want to book the profits immediately before the expiry, because the public investors, they don't want to wait until the lock-in expiry date, because once that opens there may be chances that stock price may go down severely. So already public investors might have started their selling, and because of that also we might be seeing some of the stocks are trading at very much closer to issued price only. If you see Nika, it is trading at very much closer, not major growth here. So it is opened at 1125, and now it is trading at 1180. So it might have fallen very much in recent past only, I think. So like that, this lock-in period expiry is giving a huge impact on the stock price, right? Because public investors, uh, they don't want to uh, they don't want initial investors to sell their shares, because they are the people who have the confidence, more confidence, and they know more about the company, and by seeing them only few people will be investing in the stocks. Like for example, if you see Paytm, we have a banking company, a soft bank company is investing there, and in this Paytm we are seeing 85% of the stocks are with the uh, promoters or the pre-investors or being early investors. So that means this is giving a good indication that only 15%, roughly 14 to 15% of stocks are only with the public, and remaining 85% of the stocks with the Paytm promoters or Paytm founders. So that means these public investors want these people to remain in the company, and they don't want these people to sell it. And if they sell it, they will lose the confidence on the company. So this is also one of the impact on the stock price, right? So I hope this explanation is very much helpful for you, and you understood what is a lock-in duration or lock-in period of the stock for an IPO company. So kindly let me know if it is really helpful, or if you have any doubts also, kindly let me know in the comment section. I will try to clear all your doubts in the coming videos. So thank you so much for watching. Thank you. Bye.